And our next guest recently spoke to Tesla CEO Elon Musk as part of a Spaces on X, hitting on topics ranging from self-driving cars to the dominance of passive investing. And this comes after she recently added Tesla shares to her benchmark fund for the first time in months. Of course, we're talking about Cathie Wood, Ark Invest founder, CEO, and CIO. And I definitely want to talk crypto with you, Cathie, but I did want to start with Tesla here because you did have the chance to talk to Elon Musk last week, and because you did recently add those Tesla shares back in. Although you didn't not have them, you just added more shares to the portfolio. Talk to me about the timing of that, first of all, of getting back out there and buying Tesla shares.
Yeah, a couple of things have happened in the last month, really, that have increased our confidence in Tesla. It's already high. It's the number 2 position in the flagship fund. But when we saw GM and Ford really pulling away from EVs until they become profitable, that was telltale for us in terms of share gains available to Tesla. What's puzzling is that GM and Ford are not going to be profitable with electric unless they scale.
Tesla remains one of the most revolutionary companies of our time, dominating the industry with its cutting-edge technology and innovations. However, despite its reputation, not everyone is convinced by Tesla's story. In fact, some believe that this company is highly overvalued.
You've been bearish on Tesla for ever. I mean, I feel like it's been years that I've spoken to and you've been bearish on Tesla, and yet the stock has performed really well despite whatever you want to say about the fundamentals. Why are you still bearish here?
So I'm bearish because I see it as egregiously overvalued, right? We look at Toyota as a benchmark, right? Toyota is the world's largest auto producer, about 9 million cars a year. There's nothing Tesla has that Toyota does not. Why should it trade at a large multiple to Toyota? If it's going to sell a fraction of the vehicles, maybe the technology premium, the leadership in EVs, give it a similar valuation. And that's really what we do with our $85 price target. So I'm not celebrated, though. I do need to clarify that. There are levers that they can pull, specifically the mini car in India. We've been waiting for them on both of these really since 2019. Back actually when we were last, I believe, really bullish on the stock. But from here, I see this one as a slow drip over the next couple of years.
Okay. So I guess what do you make then of the reports then today about a revamp of its most popular model in one of its largest markets, where I guess from which its factory sends out and exports the most EVs to different parts of the world?
Yeah, no, the Shanghai facility is the most important facility for Tesla. So it's necessary. All of their models are long in the tooth. People have been asking for updates of the S, the X, the 3 for years, and the Y, is losing market share in China. It's no longer the leading EV in China, so I think it's overdue, right? Some of these other updates are many years overdue. Everybody was looking forward to a new Roadster. Everybody's looking forward to the Cybertruck. Finally, we got a couple. Right? They're late. Competition's real. Competition in China is overtaking them. And, it's going to be a tough 2024 for Tesla.
Today, we take a quick look at Cathie Wood's concept of Tesla's takeover of the auto industry and how she thinks that Tesla is the most innovative and disruptive company in the world. Cathie Wood is the founder and CEO of Ark Invest, a firm that specializes in disruptive innovation and manages several exchange-traded funds that hold Tesla's shares. The investment expert has repeatedly expressed her confidence in Tesla's growth potential, despite the challenges and volatility that the company faces in the short term. She has also remained a huge fan of the car company and also plans to buy more Tesla shares in the future. In this video, we'll find out why Cathie Wood is so bullish on Tesla and how she thinks the automaker is going to take over the market. Let's dive in.
And I definitely want to talk crypto with you, Cathie, but I did want to start with Tesla here because you did have the chance to talk to Elon Musk last week, and because you did recently add those Tesla shares back in. Although you didn't not have them, you just added more shares to the portfolio. Talk to me about the timing of that, first of all, of getting back out there and buying Tesla shares.
Yeah, a couple of things have happened in the last month, really, that have increased our confidence in Tesla. It's already high. It's the number 2 position in the flagship fund. But when we saw GM and Ford really pulling away from EVs until they become profitable, that was telltale for us in terms of share gains available to Tesla. What's puzzling is that GM and Ford are not going to be profitable with electric unless they scale. And so it's a bit of a puzzling decision. And the other thing, of course, GM has basically shut down Cruise, partly for regulatory reasons, partly out of an abundance of caution on the autonomous side. And, they're losing a lot of talent because of it. And again, we do believe that Tesla is in the pole position to be the autonomous taxi platform in the United States. Cruise pulling out adds to our confidence there as well.
Cathie, I'm curious what your current thinking is on the timeline of when Tesla is going to be able to get there. I mean, this is something that is difficult, we have seen, not just for Tesla, but other companies. Tesla tends to push timelines back. So when do you think that is going to arrive and therefore, I would assume, unlock more value for the shares as well?
Yes. We're seeing some data here that I think is compelling. If you look at a Tesla, and this is based on Tasha Keeney's work, one of our analysts on Tesla, if you look at the number of miles between accidents in a Tesla with full self-driving, it's roughly 3.2 million miles. If you look at a Tesla without full self-driving and do the same analysis, it's 1 every 600,000 miles. So a Tesla with FSD is 5 times safer than a Tesla without, and 6 times safer than the average car on the road, which I guess is in an accident. This is on surface streets. It's actually more than 6 times. Is the average car on surface streets is in an accident once every roughly 200,000 miles. So pretty astonishing safety metrics. And on Spaces, when we were speaking to Elon Musk, I was asking him about NHTSA. And NHTSA is the National Highway Transportation Safety Administration. And just, how he felt the NHTSA was going to use this data. Was it important to NHTSA? And he said, absolutely. It's a data-driven organization. So we think that the numbers are compelling. And you know that 80 to 90% of all accidents are caused by human error. So taking the human out actually does make a difference.
Wood's bullishness on Tesla is reflected in her investment decisions and strategy. The stock investor has consistently bought more Tesla shares whenever the stock price dipped, and she has maintained a high exposure to Tesla in her ETFs. Cathie Wood has defended Tesla against critics and skeptics, and has also engaged in direct conversations with Musk on various platforms, like X Spaces and podcasts. As of December 2023, Tesla is the second largest holding in her flagship fund, Ark Innovation ETF, or ARKK. And according to Cathie Wood, her firm is still buying more Tesla shares. Hello everyone and welcome back to Tesla Tomorrow. One of the main reasons why Cathie Wood is so bullish on Tesla is that she believes it is the leader in autonomous vehicle technology, which she considers to be the next big wave of innovation in the transportation sector. Wood claims that Tesla is in the pole position to be the autonomous taxi platform in the United States, and that it has a significant advantage over its competitors in terms of data collection, software development, and hardware integration. She also praised Tesla's vision and execution in creating a vertically integrated ecosystem that encompasses not only vehicles, but also batteries, solar panels, charging stations, and software services, and believes that this will form the basis for Tesla's enormous valuation in the future. Before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. One other reason why Wood is bullish on Tesla is that she sees it as a beneficiary of the accelerating adoption of electric vehicles around the world, driven by environmental concerns, regulatory incentives, and cost reductions. Cathie Wood has said that Tesla is riding a wave that is much bigger than we ever expected, adding that the car company has a huge opportunity to expand its market share in both developed and emerging markets. She also highlighted Tesla's ability to innovate and improve its products and processes, which enables it to lower its costs and increase its margins. But you may ask, so why is Tesla's stock still very volatile? Well, it's important to note that the volatility of Tesla stock is a subject that has perplexed both seasoned investors and newbies alike. There are a ton of reasons why investors continue to see Tesla as a profitable investment, even though the stock may not be in the best place right now. Over the past years, the EV maker has continuously ramped up its car production. To date, Tesla has produced millions of electric vehicles, crossing a milestone that most of its competitors can only dare to dream of. But the automaker still has a chance to balance on this seesaw of volatility. No doubt, it's a challenge. However, we believe that transparent communication, steady production progress, and meeting delivery targets can all provide stability for Tesla stock.
There's an evolution, and the EV world has changed. How are you thinking? It's still a top holding. How are you thinking about the Tesla story right now?
Well, first of all, Carol, thank you very much for letting me interview that time. That was nearly 10 years ago. Ark is about to celebrate its 10th year anniversary, and you gave us that opportunity, so thank you. The world is evolving, actually, I think, even more closely to what we expected. Because we expected a lot of traditional auto manufacturers to see the writing on the wall and rush as quickly as they could into scaling big time into electric vehicles. And what has happened recently? Both GM and Ford have said, we're stepping back. We're not going to do this until it's profitable. The problem with that is, in order to be profitable, they need to scale. That's how this works. These are learning curves that they are riding down, and those are expressed in cost decline. So the fact that they're pulling back means there's more share for Tesla and others who choose to go for it.
And Cathie, I want to keep the conversation going on Elon Musk, but I want to bring it to the Ark Venture Fund. Of course, it's not an ETF. You invest in private companies, et cetera, in there. And you take a look at the portfolio, you have SpaceX in there, and you also have X, formerly known as Twitter. And in July, you had told the Wall Street Journal that you had written down your Twitter stake by 47%. Fill us in on the past couple of months. Have you written it down further, or how has that changed?
No, I think it's still there. We have to be very careful. This is an interval fund. It is a 40 Act fund, and we have to market every day. The good news is our clients can get in and have access to these amazing companies for just $500, and they get quarterly liquidity. So that's the good news. The markdowns are simply, if we see in the secondary market employee stock trading at a steep discount, we have to take that into account. If we see others in the more traditional asset management world, like Fidelity and others, marking their holdings down, we need to take that into consideration during our daily mark-to-market. So it's an abundance of caution. We have a 5-year investment time horizon. Do we think that's where X belongs in terms of valuations? Absolutely not. Absolutely not. A roughly $20-ish billion valuation for what we believe truly will become the everything app. Think WeChat Pay. Elon started his entrepreneurial career in the payments industry, and he's been thinking about this for a long time.
Tesla's position as a trailblazer in electric vehicles and innovative technologies has turned its stock into a magnet for market sentiment. News about new models, autopilot advancements, or even regulatory shifts have sent Tesla stock soaring or plummeting. The intense scrutiny Tesla faces has fueled speculative trading. Short sellers, betting on the stock's decline, add fuel to the fire, and this tug-of-war between bulls and bears further amplifies the stock's volatility. Tesla stock has taken a beating for the past couple of months, for reasons related to both the company and to what is happening in financial markets. However, while Tesla's stock price isn't that high, it's safer to invest in companies that can grow much faster than the economy and are able to stand in times of strong market challenges. And judging by Tesla's market history, these are qualities that best describe the EV company. Little wonder, seasoned investors like Cathie Wood are keen on investing in Tesla. For them, the automaker's future goes beyond its current performance, and investing in the company is more of a long-term thing. So why will Tesla's stock keep fluctuating in the short term? Keep watching to find out. And don't forget to like this video and subscribe to our channel. Let's continue.
Talking with a prior guest on the risk to Tesla, their financials, their stock price, because of some of just the views he has taken in terms on social issues. How concerned are you that next year his views start to hurt the demand and hurt the stock price of Tesla?
Well, first off, shout out to George. I read his Tesla and his work. He's a great analyst and a great person to follow if you're looking for Tesla data. And I think his point about earnings being the driver of stock prices is ultimately what's going to determine Tesla's success next year. So the fact that Elon has, become, and I don't think it's equally a similar controversy of smoking weed on Joe Rogan to making severely anti-Semitic remarks. These are different levels of, or telling everybody to F off, So I think if Musk's behavior continues to get more and more extreme, that is a risk to Tesla sales. But the bottom line, as George pointed out, it's the best vehicle on the road. It's the best value on the road. So consumers literally have to buy a lesser car because they don't like Elon. And so I don't know if consumers are going to do that or not. I know certain consumers are, for sure, but there might be many others that just simply want the best car.
Yeah, balancing whether you want to continue to buy from a figure that perhaps goes increasingly divisive versus just saying, all right, I'm able to just kind of take the juice and ultimately just keep moving and be comfortable with my car purchase, at least at this point in time.
Well, Tesla is Tesla and Elon is Elon. And I think the best thing Tesla can do is continue to differentiate its brand, as Tesla. And
haven't
that's
they
why
intertwined so much of that brand with Elon, though?
Well, it's hard. It's really hard because Elon is basically the face of the brand and the voice of the brand. And they've been, if you notice on Twitter, Tesla's been tweeting more as Tesla. They've been defending themselves more. We've seen more attempts at advertising. And I think if Tesla goes full in on advertising and continues, to sort of build its brand, Elon's effect will be less and less damaging to Tesla overall. But the bottom line is you can't diminish the effect of the damage that he's caused.
Ross, let's talk some numbers here, because we were showing in a prior segment how the earnings estimates for next year for Tesla have continued to fall really throughout the year, but most notably, at least according to Yahoo Finance data, over the past 90 days. Can this stock continue to work higher next year if earnings estimates continue to come down and Tesla does have some product miscues?
Well, I don't know about product miscues. I mean, they're going to struggle to put Cybertrucks out next year, but that's expected. In my mind, it's a launch year and it's an incredible new technology and product. That said, I like that they've lowered expectations this much because it gives Tesla opportunity to beat. So if they can actually increase margins by lowering costs and or not have to lower prices because demand picks up, maybe we get lower interest rates and maybe Tesla beats earnings over the course of the year. And I think that's what a lot of the analysts who have price targets at 300 or 350 are thinking, that Tesla might earn closer to $5 than, let's say, the less than $4 that's expected. And if that's the case, a $300 price target does look reasonable for Tesla. But right now, $4 is, where I'm at. And, so Tesla's a fully valued stock, but, we're long-term investors. So, we're very bullish on Tesla's long-term. And it is an AI company. It's absurd to not, give it credit for where it is.
Tesla's stock price isn't just influenced by the company's performance, because this is a subject of market-wide speculation. Instead, economic indicators, interest rate changes, and global events all send shockwaves through the stock. Similarly, factors such as inflation and production challenges are also major drawbacks in the company's finances, although they do not appear to be so much of an issue for long-term investors. In fact, bullish Tesla investors are less bothered about the news. They invest in the business and not the stocks. We can't discuss Tesla's volatility without acknowledging the Elon Musk factor. His tweets, interviews, and public statements have the power to trigger massive price swings, leaving investors wondering whether to hold on or bail out. You see, Tesla's stock is often closely tied to its production and delivery numbers. For instance, delays, hiccups, or exceeding expectations can all send ripples through the stock market, causing significant price fluctuations. Also, analysts' predictions play a pivotal role in driving stock volatility. Conflicting forecasts, whether optimistic or skeptical, lead to swings as investors grapple with differing viewpoints. Similarly, short-term traders who are looking to capitalize on price fluctuations contribute to the stock's volatility, as their rapid buying and selling amplify the highs and lows. Another reason for Tesla's stock volatility is that the automaker's passionate fan base makes decisions based on excitement rather than solid financial reasoning, leading to price volatility. But despite these wild fluctuations, Tesla's long-term vision remains unchanged. Its pursuit of sustainable energy and innovation continues to attract investors who believe in its mission beyond short-term volatility.
We think about Elon Musk, brilliant, but also erratic. And I'm curious how you think about Elon, the individuals, versus Elon, the companies he's creating, the things he's doing. Because I think if there is time, any other CEO of a major publicly held company would, I think it's safe to say, not be able to get away with a lot of what he has done. So help us, educate us, how you make sense of it, of someone you have followed, talked with for many years.
Well, first of all, very often we just look at what he does, not exactly what he's saying, which can often be a distraction, or it can be an advertisement for his cars or for X or for SpaceX and so forth. So, but we have a scoring system as we are evaluating companies and their founders and their management teams. And there are 6 metrics, and one of them is moat and barriers to entry. And I think Elon is a maestro of raising barriers to entry with innovation, which that is so much faster than anyone else. Why? Because he's so first principles, physics driven in his analysis of how to approach a new idea, a big idea.
So tell me this then, Cathie. I mean, if you look at the cohort of the CEOs that you back, Brian Armstrong, does he hit that bar? Is he above Elon, or is he at the money? You've got Elon, you've got Brian, you've got Tony Wood at Roku. Does anybody come close to Elon, or is Brian Armstrong maybe even at the money with Elon or above?
Well, we don't actually look at the world that way, one relative to the other in terms of management teams. We do look from our scoring system at the scores, which include moat, management, people and culture, execution, valuation, that might surprise people, and product and service leadership, and thesis risk. Those are the 6 scores. And all 3 of them score very highly. Which one scores the highest? They are actually very close to one another, to be honest.
Cathie Wood is very bullish on Tesla because she believes it is the leader in autonomous vehicle technology, the beneficiary of the electric vehicle adoption, and the innovator in the transportation sector. The stock investor sees Tesla as a long-term growth story that has a lot of room to run, and she has expressed her confidence in Tesla's future through her investment actions, public statements, and personal interactions with Musk. Wood's bullishness on Tesla is backed by her optimistic Tesla stock forecasts, and they are not just based on her assumptions, but also projections for Tesla's revenue growth, profitability, and valuation multiples, as well as the potential upside from its autonomous taxi network. These ambitious price targets also reflect her vision of Tesla's disruptive potential. As we navigate this thrilling Tesla stock ride, remember that understanding and anticipating volatility is key. It's not just about making the most of the ups and downs, but also staying aligned with your investment goals. Successful Tesla investors like Cathie Wood embrace the volatility, viewing it as an opportunity rather than a setback. By diversifying portfolios, understanding Tesla's fundamentals, and maintaining a long-term perspective on the company, you can mitigate risk on your investment. Tesla's stock volatility influences the broader electric vehicle market. It sets benchmarks and standards, shaping the perception of electric vehicles as a whole. So whether you're an investor or just along for the ride, remember to keep your eyes on the bigger picture. Tesla's stock is volatile, no doubt, but the stock price doesn't always describe Tesla's performance or fundamentals as a business. What are your thoughts on Cathie Wood's comments about Tesla? Let us know in the comments section. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.